Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. If you want to read more about what John writes on a regular basis, you could head to www.incomeinvestors.com. You can find the link to the website in the description below. When it comes to investing, it's important to have a diversified portfolio. This includes a mix of value and growth stocks. Growth stocks, as the name implies, are younger companies whose growth rate outpaces overall market. Most companies think of growth stocks as tech stocks. Value stocks tend to be larger companies that are in the mature stages. Think blue chip. Those looking for reliable long-term capital gains and reliable growing dividends should consider value stocks. Companies that have raised their annual payouts for decades mean they have rock solid operation and balance sheets and make lots of money no matter what's going on.
Yeah, and within the world of dividend stocks, there are those that have raised their annual dividends for decades. We call those Dividend Kings. Now, they're companies that have raised their dividends for at least 50 consecutive years.
But not all dividend kings are created equal. While many of them are generally solid companies, some of them face difficulties. The question is how they respond to those difficulties. Investors who seek contrarian opportunities and who are willing to be patient while collecting dividends should look at Leggett Platt Inc., traded on New York Stock Exchange under symbol LEG.
Yeah, Leggett is a diversified company that manufactures engineered components and products for homes and automobiles. It's been around for, I think, 140 years and has an expansive global footprint made up of 35 manufacturing facilities in 18 countries. Now, the company's products include everything from like adjustable beds to private label finished mattresses, specialty bedding foams, bedding industry machinery, home furniture and work furniture, flooring underlayments, and automotive seat components and lumbar systems.
And John, let's talk numbers here. How is this company doing financially?
Leggett Platt's 5-year revenue picture shows growth in 4 of its last 5 reported years, including a 10-year best of $5.15 billion in 2022. Now, the company has easily surpassed its pre-pandemic revenue level, but there are some headwinds coming. Analysts estimate that Leggett Platt Inc. will report lower revenues of $4.72 billion in 2023, followed by $4.72 billion again for 2024. Now, on the bottom line, Leggett Platt has delivered profits, but the lack of consistent growth has actually hurt the company. The outlook for its earnings per share is tepid right now. Analysts expect Leggett Platt to report a drop in its earnings to $1.39 per diluted share for 2023, prior to a slight rebound to $1.40 per share in 2024. Now, the company has plenty of work ahead to rectify this situation. This is where patience is required.
It's dividend. You had earlier mentioned that it's a dividend king. What's happening with dividends here?
Well, Leggett has paid a dividend for 53 consecutive years, and it's raised it for 52 straight years. It declared a fourth quarter dividend of 46 cents per share. As of this recording, that represents a forward yield of 7.1%. The company's dividend coverage ratio is 2.5 times, which suggests that this dividend streak should stay intact.
And finally, how is LEG stock doing?
Leggett Platt has raised its dividend for 52 straight years, but its share price has been under pressure lately. As of this recording, it's down by approximately 28% over the last year and 57% from its record high of $59.16 per share in May of 2021. At the moment, Leggett Platt stock is struggling for support. Its chart is flashing a death cross, which is a bearish technical crossover pattern that appears when the 50-day moving average breaks below the 200-day moving average. Leg stock recently recovered to its 50-day moving average of $24.75 per share, which is encouraging. Reclaiming the 200-day moving average of $28.01 would certainly be a bullish sign.
Thank you so much for your insights. Make no mistake, Leggett Platt has a ton of work to do. It's not going to be easy, but Leggett Platt stock share price deterioration, along with consistent dividend, will help compensate of some of the risk of holding LEG stock. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.